Is it inflation or just your imagination? Is the economic data even making sense or even useful at this point? Ultimately, what the Fed chairman sees in the economic tea leaves, or their morning oatmeal for that matter, is not within your control. However, protection of your retirement savings is in your control. This should be motivated by knowledge and confidence, not fear. If you think you may be falling behind in your financial goals, see the video description to access the free Inflation Retirement Calculator to make sure that you are on track. To discuss the present economic environment and how investments in scarce and time-tested assets like gold and silver can help you secure your financial future, we will hear from macro analyst and investor Lyn Alden, economist, White House advisor, and author Jim Rickards, economist and investor Keith Weiner, and former congressman and activist Mark Finchem.
There's been this quiet theft going on over time. You'll notice the document that has a house, has eggs, has hard money, and then has fiat currency. I find it interesting that in 1957, a 1,600 square foot house would cost roughly the equivalent of 37,700 eggs, which would be 13,500 silver dollars, which in that day would have been 13,500 silver certificates. Now today we move forward to, and this is just 2007 because this is when this was prepared, that same house would still cost the equivalent of 37,700 eggs, and it would still be roughly 13,500 silver dollars. However, in Federal Reserve notes, it would be $175,000. That's called inflation. So when somebody takes that $13,500 in silver dollars and exchanges them for Federal Reserve notes, the IRS says that that's a taxable event.
Basically, the idea that we have to, through central decision making, keep people on a constant treadmill of consumption by discouraging their savings and trying to get them to go consume faster, I just think it's very misguided policy. I think the real reason that they don't like deflation is because the one thing it is not compatible with is tremendous amounts of debt. They're models based on having a very highly leveraged system. And if you ever get kind of broad deflation, those liabilities start getting harder. Basically, our system only works when those liabilities are kind of constantly growing and constantly getting mildly diluted. I think that's ultimately the real reason. That's why when people hear deflation, they assume it's a bad thing. They think of recessions because that's in the modern context the only time we ever really see it. Whereas structural deflation's good. We like the fact that TVs and computers and phones are structurally cheaper now, especially on a per quality basis than they were 5 years ago, 10 years ago, 20 years ago. Like literally the most valuable sector in the world is the most deflationary one. You know, Apple's the most valuable company in the world, even though they sell a deflationary product. Every year, their phone gets a little bit better, especially on a per dollar basis. And people don't just say, well, I'm going to wait 7 years to get a phone. You know, sometimes you might push it out 3 months to get the next model if there's a model coming up. But, people need a phone. And so they go out and get a phone. People need a computer. They need a car. They want to live their life.
And of course, the gold standard worked for a long time, so we have historical proof of this. Virtually all the gold ever mined in human history is still in human hands. So I looked back in the historical records to see just how much gold did they have in London at the peak when London ran the world's commerce and the world's monetary system in the mid to late 1890s. That amount was 160 tons of gold. That's it. To put that in perspective, gold mining in the state of Nevada today is 166 tons. We produce more in one state in the United States than London had when it ran the world. So there's no problem with quantity. We need an efficient credit mechanism that allows trade to clear. And they had that in 1890. But if we're going to return to the gold standard, it's not the gold that's going to come and go. It's the credit based on gold that's going to come and go. And the credit can expand and contract, with the demand. Unlike today, when credit expands with the dollar, it can't contract because there's no extinguisher in the gold standard. The credit can be extinguished just as easily as it was created. It wasn't a problem in the 1890s. I don't think it would be a problem again.
Just a quick interruption to say thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Also, a quick mention and shout out to one of our sponsors, American Hartford Gold. American Hartford Gold is a leading gold investment company that helps individuals and families diversify and protect their wealth with precious metals. Whether you are starting a brand new gold IRA or rolling over an existing account, the company will make this process seamless and stress-free. With endorsements from respected and renowned voices across America, and one of the lowest investment minimums in the gold IRA industry, American Hartford Gold makes it easy to get started investing in precious metals. To find out more about American Hartford Gold and how this trusted gold investment company can help safeguard your coveted retirement savings, see the link in the video description to visit American Hartford Gold's official site to receive a free gold investing guide. Also, check out our video review of of American Hartford Gold by clicking the link in the top right. Now, back to the episode.
When people talk about the gold standard, I think there's a tendency of a lot of critics to imagine that what we're talking about is going back to the medieval times. We're going to wear sackcloth robes. We're going to tie our waist with a rope belt. We're going to have the suede leather purse jingling with gold and silver coins in it. The reality is today, Apple Pay, you just take your watch and you go deet at the checkout counter. All the same things exist for gold as for Bitcoin. Yes, you can spend your gold. You don't have to ship it around. There are companies that, if you want to spend your gold, they sell it and pay dollars into the Visa, MasterCard rails or whatever. I imagine that's what would be, the case. Absolutely. If you had a crypto token that was redeemable in 1 gram or 1 ounce or whatever of gold, then as long as the redemption was real and you weren't committing some sort of fraud, then the value of that token would be whatever, 1 gram or 1 ounce. Absolutely. And yeah, I do think that's viable. I do think that is the future.
Western elites being miseducated. Again, for someone who's closer to, the 60s or 70s, or who has spent decades as a monetary scholar, someone like Ben Bernanke, they get gold. They just won't talk about it. Greenspan's another example. Greenspan had nice things to say about gold before he was Fed chairman, and he's had nice things to say about gold since he left as Fed chairman. But during the 20 plus years that he was the Fed chairman, he didn't say anything nice about gold. So it shows you a little bit how that system works. But there really is a, what I would call this education gap, and people don't really understand it. But that does not seem to be as prevalent overseas. I travel around the world quite a bit. I speak and do consulting on 5 continents. And I do find that Asians in particular, Indians and Chinese, and also others, you go to Malaysia and other places, they do understand gold a lot better. They haven't been as, I'll use the word brainwashed or miseducated.
Even if central banks and the IMF don't want a gold standard, you can go on a personal gold standard. You can personally protect your wealth, personally protect your hard-earned savings by buying some gold, putting it in safe storage for yourself. And I guess I call it you don't have to wait for a central bank gold standard. You can go on a personal gold standard.
With a 5,000-year record that has withstood every economic business cycle, stock market booms and busts, global conflicts, and outlasting every faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. An often used criticism for holding gold is the opportunity cost of gaining yields elsewhere, such as bonds or high-quality equities. Monetary Metals is a gold investment company that unlocks the productivity of gold by offering a yield on gold paid in gold. Monetary Metals delivers interest on gold through the company's gold fixed income investments, which aim to provide a fixed return with low risk of loss. This provides investors exposure to gold's unique attributes, plus a real yield that grows your total of gold ounces held. To learn more about Monetary Metals and their innovative investment products, see the link in the video description. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.